Yeah, so I just want to revisit my long-term outlook for the US dollar, the dollar index, the dollar yen, and the euro against the dollar. Now, anyone who knows me well knows that I've been bearish on the US dollar for a few months, just prior to the big move lower on the dollar, higher on euro dollar, which followed the CPI release back in February. So extremely bearish on the US dollar, and recent action has really kind of borne this out. So just taking a look at the long-term picture, firstly of euro dollar. So what you can see here, this is a monthly chart of euro dollar, and it's got two major cycles on it. So we've got the up cycle from the early 2000s into the financial crisis, then the decline, the bear market that went into 2022 post Russian invasion of Ukraine. And since then, the market has stabilized. So where do I think we are within the current cycle? Well, what we've got is the advance from the 2000 low on euro dollar broke down into an impulsive five-wave sequence: 1, 2, 3, 4, and 5. So that was an impulsive sequence. The trend is up. From that point, we've broken down. The bear market breaks down into not a five-wave move and a corrective move, which breaks down in Elliott terms as a double zigzag. So we have A, that's the first leg down, a B wave triangle, A, B, and then C, that's the first zigzag. Then we have a correction of that, which is X, A, B, and C. There's the X wave correction. And then we've got a final zigzag to complete the move, A, B, and C. Now from that point, we had the bounce, we had the retest, and then we're starting to break higher. Now, notice how this retest, this pullback, breaks down into a three-wave move, A, B, and C. Now, what does that tell you? In Elliott wave terms, a three-wave move is always against the trend. So if you're trading, you need to trade against the ABC. So the way you should be positioned, as far as I'm concerned, is long, because the trend is actually up. It's turned from down to up based on this A, B, and C down. So I think what we're going to do is we're going to blast higher in wave 3 of this sequence. 1, 2, and then we blast higher in wave 3. I think we're at a similar stage of the cycle to where we were back in 2002, where this marked the end of the long-term bear market back in 2000. Move higher, 1, correction 2, and then we blast higher in wave 3. We're at a very similar stage of the cycle right here. We haven't yet broken through the high of wave 1, which comes in up here. But we will, in my opinion, I think we will be doing that. And then we'll be kicking off this long-term multi-year cycle to the upside. Now, notice that on this chart, as well as the Elliott wave notation, I've put in the president at the time. Now, since Nixon floated the US dollar back in 1971, Republican administrations have tended to see a net decline in the value of the dollar, double-digit wise. One exception to that would have been Jimmy Carter, but that was the exception rather than the rule. So back Nixon and Ford together saw 14% decline, continued with under Jimmy Carter, and then the Republicans, we saw a boom and a bust in the dollar. There was basically ended up where it started over the terms, and then in came Bill Clinton, 30% advance, Bush 29% decline, Obama 24% advance, Trump 13% decline, and Biden 17% advance. So you could see, particularly since Clinton came in, it's been quite a marked picture here of Republican administration seeing a net decline in the value of the US dollar. So, in my opinion, we are in the very early stages of a multi-year decline in the value of the dollar, based not just on the Elliott wave structure, but also on the presidential cycle. Moving across to dollar index, let's just take a look at that one. So dollar index is pretty much like euro dollar, but flipped upside down for the most part, as the euro is the largest constituent. So what we have from the 2008 low dollar low, is an advance A, a corrective wave B, which doesn't make a new low, and then we have 1, 2, 3, 4, 5 for C. So that's your first zigzag, double zigzag advance. Then we have the X wave correction, and then we have A, B, doesn't make a new low, C. So that's the end of the double zigzag bull market for the US dollar. I say bull market, but it's actually a corrective wave. Since topping out, we've had one wave, one down, and then there's that three-wave move against the trend, A, B, and C. That is a corrective advance. Corrective of the first leg down, and then I think we break down, we start to see some aggressive dollar selling. Now, what are these two lines that we've got on the chart where the bull market topped out? Well, this, if we go back that little bit further, this is the double top breakout level from the previous, the start of the previous bear market. So double top here, down we go, and the rebound doesn't really do much above that level. So we've broken down. We've seen this retest, which doesn't quite get back up to the orange line, and then we started to see some selling since that point. So I think what we're doing is we are in the very early stages of a long-term bear market, which should take us way down on the dollar index. Just flipping back to some the other markets. So this is euro dollar, looking like we're going to ramp up here. Moving across to let's move across from the yen crosses for now. Dollar yen's the interesting one for me. In that the advance that we saw from 2011 up until last year broke down into an A, B, C move, a three-wave advance. A, B, and C, a zigzag, an Elliott wave zigzag. Now this came on the back of the previous bear market, A, B, C, D, E. This is a an Elliott wave, fourth wave triangle. Just let's extend that, which typically marks the last consolidation before the turn, which is what I think it did. Let's get rid of that. So that was a previous fourth wave in there, and that was the final fifth of the last long-term upcycle. So since then we've seen A, B, and C, and I think that's the end of the corrective advance. Let's go back on the long-term chart. So this is when the dollar was floated. Okay, so early 70s. So the trend is clearly down, and we've since seen a massive ABC correction against that trend. Now, interestingly enough, with Elliott wave, what you tend to find is when a market corrects against a previous trend move, the correction usually tops out pretty close to the terminus of one of its previous corrective subwaves, which happened to be here around that 160 level. So not a bad place for dollar yen to top out. So let's move on. So we have A, B, and C. Just out of interest, I think we are in the early stages of a third wave down, pretty much to where we were back in late 2012. So here, if you flip this thing upside down, there's the first leg up at the end of the bear market. There's the retest, doesn't make a new low, wave two, and then it starts, and the buyers step in again. We start to see the acceleration higher, and before you know it, away we go in this bull market. And I think we're at a similar stage here. There's the first leg down. There's the deep second wave, just as that was a deep second wave. So people are still bullish, looking for new highs, but it doesn't make a new high. It tops out and starts to fall. And that's where we are, I think, right now. So obviously, once we start to crack through these levels, just below 140, then I think we can really start to see this thing accelerate lower. So I think we're very early stages of a new multi-year, maybe multi-decade bull market for bear market for dollar yen. Let's just move on to, there's one other market I wanted to look at is dollar mex, Mexican peso, because I think it's traced out quite a nice Elliott, it's tracing out quite a nice Elliott pattern. So what we have here, a little bit like that dollar yen thing, we had the fourth wave triangle, which was the last consolidation before the last push up in the long-term bull market. A, B, C, D, E. There's wave 4. There's wave 5, and that's the top of a long-term up cycle. So since then, we've traced out an ABC correction against the trend. So just imagine dollar yen but turned upside down. There's the A leg down. There's the B wave correction, which breaks down into A, B, and C. And then we've had 1, 2, 3, 4, and there's your 5. So that's the end of the correction. That's the end of the long-term correction of the long-term bull market in dollar Mexican peso. So what I think we've done since then is traced out a first leg higher, wave 1, and we're in some kind of choppy second wave where we've topped out and we're starting to do a lot of chop. Now this might tie in with some dollar weakness over the longer term. So we see chop, 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 but I don't think this makes a new low. It may come down and retrace wave 1 fairly deeply, but I think we base out. There's a big level down here, 18.5. So that could be a place to look for this thing to base out and start to move higher. So if anyone's got any questions on any of this stuff, let me know. I'm always happy to answer questions about my my analysis, my wave counts, or if anyone's got any other markets they want me to take a look at. So thanks very much, and take care.